Hello, my name is Jack Stover. I'm President and CEO of Interpace Diagnostics. Our NASDAQ symbol IDXG. Thank you for joining us today. Before I get started, let me just refer you to our forward-looking statements. Obviously, we will be talking about things that would be forward-looking in this presentation, and I ask you to refer to this before you evaluate our presentation. So our mission is that we are a fully integrated commercial company that provides both molecular and diagnostic tests and pathology services to evaluate the risk of cancer by leveraging the latest technology and personalized medicine. We are focused on early determination, and we're focused on indeterminate biopsies. And in fact, as a commercial company, we're evaluating the opportunity to bring other products to market to our very important customers. So uncertainty drives the need for molecular testing. Today in the marketplace, many of the evaluations that are done have been done through chemistry or have been done through visual evaluations. We bring to the marketplace molecular diagnostic. We believe molecular will provide improved outcomes and evaluate or create the opportunity for appropriate surgeries at the right period of time. In both of our assays that we currently offer, we believe that there are a significant number of unnecessary surgeries. So the right treatment for the right patient at the right time. Investment highlights, I'll let you look at this, and if you've been following us at all, you'll know that we're NASDAQ listed. You'll know that we have a dedicated sales force, but what you won't know necessarily is the success we've had on reimbursement. We've raised a significant amount of money, over $14 million since the end of 2016. 2015 to 16, while we were restructuring our balance sheet and reducing our long-term debt, we were also able to grow our revenues by almost 40%. Why do we like the molecular diagnostic business? Well, it's real simple. It's lower cost of development, there's lower risk, there's faster time to market, and lower regulatory hurdles when compared to the drug market. So we're able to get there quicker and cheaper. But remember, we're not treating patients, we're diagnosing patients. And we believe we play a very important role in that. As a matter of fact, the guidelines supporting molecular diagnostics are dramatically improving. On the thyroid side, they're very clear-cut. And on the pancreas side, which is our other product opportunity, the guidelines are improving on a regular basis. So our product portfolio, we have 4 products in the marketplace. PancraGen on the GI side, and PancraGen, which is a product that we are just launching. ThyGenX and ThyraMIR, which we really combine on the thyroid side. The attractiveness of these products is that the thyroid marketplace is around $350 million, of which only about $100 million of revenue is currently being developed. So we believe there's a sizable market opportunity. On the pancreas side, we believe we're the only company in that marketplace. And on the Barrett side, or the PancraGen side, we believe, again, that it's a very sizable market, and I'll take you through that in a minute. So some recent accomplishments that we've had. I've mentioned some of the financial successes that we've had, but on the commercial side, announcing the Aetna coverage, announcing United Healthcare coverage for thyroid, New York State approval, and launching multiple international distributions has been very important. Our patents continue to grow, and we launched an exclusive relationship with LabCorp in terms of co-promoting our thyroid business. On the reimbursement side, 250 million lives are now covered. 71 million lives on the pancreas side are now covered for reimbursement. And on the clinical side, to support our products in the marketplace, we're continually coming out with new product extensions, and we're coming out with new evaluations and new product components. The most recent product improvement we've had is we've launched our TERT marker of aggressiveness June 1st, 2017 for our thyroid assay. Let's talk a little bit about PancraGen, our pancreatic cancer risk classifier. As you all know, pancreatic cancer is a very deadly cancer. There's a 5-year survival rate of under 8%. We believe with our integrated molecular pathology of evaluating and combining imaging, cytology, and fluid analysis with our molecular diagnostics that we're able to provide the pathologist a unique evaluation into the disease state at a very early stage. So results published in the leading GI journal Endoscopy indicate that compared to the Sendai guidelines that were developed in 2012, that our PancraGen assay is significantly better, especially on the positive predictive value. And so PancraGen can identify non-progressors as well as the 2012 Sendai guidelines. However, we're significantly better at identifying progressors. We have lots of clinical evidence supporting PancraGen as a potential new standard for prognosis and diagnosis of pancreatic cysts. And PancraGen adoption and growth across the country and actually internationally has continued to grow. Novitas, our Medicare MAC, has been extremely supportive, but we've also added several commercial carriers. Now 250 physicians and hospitals have used PancraGen, and over 30,000 tests have been performed. Thyroid, our ThyGenX and ThyraMIR assays for endocrine oncology. Some of the same challenges in terms of thyroid nodules. Cases keep growing as the evaluation of thyroid nodules is getting better. However, the deaths remain relatively flat. Deaths are not really growing. The prevalence of thyroid cancer in 2014, there were an estimated 726,000 people living with thyroid cancer in the United States. The clinical dilemma is real straightforward. How do we deal, or how do they deal with thyroid nodules that are indeterminate? And basically the play for molecular testing is that we believe that approximately 77% of the indeterminate thyroid nodule surgeries today can be avoided or converted to what we call active surveillance. Obviously, in the malignancy area or the suspicious for malignancy or benign or non-diagnostic, that's not where we are. We're in the indeterminate cytology or cytopathology space. There's a market leader in that space. The product is called Afirma. They've been in the market. They've invested many millions of dollars to develop this market. We believe our combination testing of ThyGenX and ThyraMIR, which demonstrates as good a negative predictive value as the market leader, but a significantly better positive predictive value, has significant opportunity in this marketplace. And in fact, much of our growth recently has been in the thyroid market with our two combination testings. Again, we have great clinical validity and support by well-known clinical research journals that are peer-reviewed, et cetera, indicating the support for our ThyGenX and ThyraMIR, as well as the utility of our products as well. In the relatively short time that we've had ThyGenX and ThyraMIR on the marketplace, we've had over 400 physicians and hospitals and 15,000 tests performed. And of course, we're very proud of our relationship with LabCorp, and we're certainly hoping to expand that as well. PancraGen is our esophageal cancer risk classifier. And this is a product that, again, is a very big market opportunity, but for us is a product that we have developed utilizing the same platform, our PathFinder platform, as our PancraGen assay. For those of you that don't know what Barrett's esophagus is, you probably know what gastroesophageal reflux is. And 6% of patients progress to Barrett's, and about 1 to 3% of patients with Barrett's progress to esophageal cancer. Esophageal cancer is just as deadly, if not more deadly, than pancreatic cancer. Today, perhaps the best treatment is ablation. Effectively, what happens is the lining of the esophagus is burnt or burnt out with the attempt to remove the Barrett's esophagus. We focus on being able to identify and assist in assessing which patients should be ablated and which patients should have even perhaps more active surgery. The reason we think the market is so large is the screening opportunity itself, we believe, is a $1.5 to $2 billion market potential. And we recently launched our clinical experience program September 1st of 2016. So we're really garnering the information and data that's in the marketplace to evaluate how we can position our product in the marketplace. What can PancraGen do? PancraGen has multiple opportunities. It helps in the strategic evaluation of esophageal cancer and Barrett's esophagus. It can avoid unnecessary and expensive recurring ablations, which oftentimes are at least $30,000 per ablation, and also help in terms of monitoring and overall reduce the cost of healthcare. And effectively, PancraGen can provide and allow for a more personalized management of Barrett's patients. Again, with Barrett's, we already have multiple publications supporting both clinical validity and utility. We need more, and we're working to continue to grow that. Briefly, as far as our financial review, we're really proud of our second quarter results. We recently announced a 7% increase in revenues in Q2 over Q2 2016, and an 11% increase over Q1 2017. Our costs are very much in line. When we compare 2015 to 2016, we reduced almost $30 million in operating costs. And at the same time, in that same period, we grew our revenues by almost 40%. Our cash balance at the end of Q2, at the end of June, was very strong at $14 million. That's up significantly, based upon where we were at the end of 2016, where we had only $600,000 in the bank. We've reduced our overall debt. We've eliminated a lot of the milestones, royalties, and other overhangs that we had. And in fact, we're most proud to report that our stockholders' equity at the end of June of 2017 grew to $36 million, up from $6 million in the end of the second quarter of 2016. Intellectual property is also critical to us, and our patent portfolio and proprietary attributes continues to grow. We continue to invest both domestically and internationally as well. The key drivers of growth for 2017, the remainder, and the early part of 2018, we've broken it into two growth groups, internal and external. On the internal side, we're continuing to look for more reimbursement. We're launching new products. We expect to be able to expand our sales force, focusing on our largest growth areas. We've continued to improve our assays by, for instance, launching the TERT marker of aggressiveness, and soon we'll be coming out with our second version of ThyGenX and increasing additional lab contracts. Externally, because of our commercial capabilities and potential, we're looking for selective, accretive M&A opportunities. Obviously, with a large market opportunity for PancraGen, we are identifying and working towards developing strategic partnerships while we're identifying how we can utilize PancraGen in smaller market opportunities ourselves. And as I said, we're very proud to have LabCorp as a partner. We're looking to basically renew and extend our contract with LabCorp in the very near future. We've got an experienced management team, both in diagnostics and in therapeutics. In 2016 and the early part of 2017, we added Jim Early as our VP and CFO. But in addition to that, we have a group that has both large company experience as well as smaller company, entrepreneurial type companies, very much like Interpace, and an experienced management group that has worked with NASDAQ companies like we are. So why invest in Interpace? First of all, we think we offer a unique profile as a commercial company in molecular. So our expectation and hope is to continue to grow that. We are a NASDAQ listed company, and our liquidity has been extremely strong. We've completely restructured our balance sheet and positioned the company for growth. We have sufficient cash. We certainly are attracting a lot of interest in terms of potential partnerships. Our hope is to be able to grow this business significantly, and we believe we have a significant BD opportunity and a large market opportunity in our PancraGen product for Barrett's esophagus. Thank you for your time, and if you have any questions, we'll be happy to take those shortly. Thank you.
Okay, we're now opening the line for our Q&A session with Interpace Diagnostics, and with us today we have Jack Stover, President and CEO. Welcome, Jack.
Thanks, Paul. Nice to be here.
Glad to have you back. Our first question, several investors have asked about yesterday's news regarding the extension of the agreement with LabCorp. Can you maybe talk a little bit more about that relationship with LabCorp and what this extension of the agreement means for the company?
Sure. We have initiated an agreement with LabCorp a little over a year ago, primarily focused on our thyroid assays. And at the time, LabCorp was very interested in getting into the high value added molecular diagnostic business that we represent. For the last year or so, we've been working together and really assisting each other in the transition. And part of that transition has been clearly electronic data interchange, meaning us getting on their system and us training their sales reps to help sell our products. The good news is at the end of that year, that introductory year, and with this recent extension of the agreement, multi-year extension, LabCorp, who is the second largest lab service company in the United States, has embraced us as an exclusive partner in thyroid molecular diagnostics. And we've done a lot of hard work in the last year or so building that relationship and building the bridge. And we have certainly great expectations of developing that relationship going forward. And we're excited to be partnering with them.
Very good. Thank you, Jack. And we've also had a few questions from investors regarding PancraGen and your test for the Barrett's esophagus. Can you talk a little bit about the test, where it's at in the commercialization process, and in the overall market opportunity that you're trying to address there?
Sure. The good news is about the PancraGen assay is it is based upon the same technology and the same platform that we call our PathFinder platform that we developed PancraGen. And so the basis of the core technology is the same. The product is developed. The product is in the market in terms of a physical product that physicians can use. We have effectively soft launched it with several key opinion leaders, and effectively we've been gathering information for, I guess, about the last 9 months or so in terms of, assessing the value proposition for Barrett's. We're very excited about it. We have a small study that has been our base study, and the results are excellent. We published that in the past. As we look at the market opportunity for the product, we recognize that in the evaluation opportunity, we've calculated the market size to be somewhere between $1.5 and $2 billion. So we see it as a big market opportunity. Why so big? Well, Barrett's esophagus is oftentimes a function of GERD, and GERD is very prevalent in the population. And of course, a relatively small number convert from Barrett's esophagus to esophageal cancer, but esophageal cancer is a very deadly cancer, very similar to pancreatic cancer. It gets identified late in the process, oftentimes too late to really treat. So there's this growing level of attention, both in terms of medical device companies and companies like us in the diagnostic space, but few, in fact, have a product that's really available for the marketplace, and effectively we're testing that out. In addition to that, though, we believe because of the size of the market opportunity and the reach, that it would be very efficient for us to work with a large market partner to help the further development and to accelerate that process. So we've been developing applications, reviewing slides or samples, and working with several potential partners that we're very encouraged, will develop to a more sophisticated commercial relationship in the near future.
Thank you, Jack. And our next question, can you talk a little bit about the international opportunity for your various assays?
Sure. Most of the international opportunities that we've done so far, and they are, relatively broad-reaching, include working in Israel, working in Canada, and we've done some work in South America as well. What's interesting about those opportunities is that we're able to receive samples and basically process them in our lab here in the United States and effectively reissue those reports. However, we are also looking to reach outside of the Western countries and evaluate doing more sample gathering and potentially even working with partners to put in CLIA labs that are really extension of our CLIA labs here in certain other countries as well. And certainly several of those are large market opportunities which are exciting to us. But we still have plenty of opportunity just in terms of Western Europe as well as South America and Mexico to further expand our opportunities. And we're excited that we've been able to do that relatively successfully.
Thank you, Jack. And our next question, can you talk a little bit about how your tests differ from what was really the standard of care before your test hit the market?
Sure. It's interesting. If you look at the target application for our assays, we're very much focused on indeterminate biopsies. So a relatively large percentage of the biopsies in thyroid cancer and in pancreatic cancer are indeterminate. And part of the reason they're indeterminate is it's at a relatively early stage in the development of that specific cancer, with the strategy being that the earlier that we can identify these indeterminate biopsies and make a conclusion that this one's going to metastasize and this one is not, we're able to dramatically change the way healthcare is delivered. For instance, in both thoracic and in pancreatic cancer, about 70% of the surgeries that are currently done are unnecessary. And part of the reason for that is the guidelines are very aggressive about surgeries. The problem with aggressive surgery is two things. One is there's a lot of surgeries that are being done that are not necessary, or perhaps they're not necessary yet, meaning that it would be much easier to continue to evaluate a patient. And number two is that the aggressive surgeries oftentimes have really dramatic side effects that can be life-changing for patients. And if 70% of those surgeries are unnecessary, then roughly 70% of the negative outcomes are probably not necessary as well. There's a mindset, I think, among patients and even some physicians that, gee, we'll just cut it out. And unfortunately, it's not a cut-it-out solution. That's only one potential application, and cancer is about cell growth, and it's impossible or almost impossible to get all cells, in terms of an individual surgery. So understanding the molecular component and understanding the potential for that early stage biopsy to move forward in an aggressive way is really the space that we occupy. And that's how we're really working on a personalized basis, really to change medicine.
Very good. Thank you, Jack. And I guess in the few minutes we have left, you covered a lot of great information in the presentation and here in the Q&A as well. But I guess just in summary, what's the key takeaway for investors? Why should they have interest in Interpace today?
Yeah, it's always a good question. A number of things that I think are really key issues. And I've kind of boiled them down to what I consider 5 key opportunities. One is we have a clean balance sheet now. We've worked hard to accomplish that over the last year and a half. And importantly, we have sufficient cash. Cash is always important to a company like us that's in the growth sector. We have commercial momentum. So we're not talking about products that might come to market or might get approval. We're a commercial company. And we have products on the market. We've had success with those products. Number 3, we have a large market potential product in PancraGen. And that product is already on the market, so the development costs or the development risks are certainly well behind us. It's really the market opportunity and the awareness issue. And in fact, from a competitive point of view, we don't see much competition for our PancraGen assay. We have, in addition to that, we have the ability to invest in and acquire products and integrate them successfully into our infrastructure. And so while we talk a lot about organic growth, our opportunity to grow at an exceptional level beyond organic growth is pretty clear-cut, and we've already demonstrated that. And perhaps the last reason to potentially invest is that we still believe that Interpace is undervalued. We have about $14 million in cash and a market cap perhaps approaching $30 million, and revenues that we last reported on an annual basis in excess of $13 million. And so the dynamics don't make a lot of sense compared to our competitors. And we believe that as we gain more recognition and awareness in the market, that there'll be opportunities for significant shareholder returns.
Very good. Thank you, Jack. And we agree very much. Quite a undervalued situation relative to peers in the market. Quite a tremendous amount of great things going on for the company. You've accomplished a lot already, and looks like there's a lot to accomplish here in the near term as well. Looking forward. So happy to have you back on. For our viewers, this was Interpace Diagnostics. Ticker symbol is IDXG on the NASDAQ. Again, that's IDXG. You can sign up for news alerts for Interpace Diagnostics right here at RedChip.com.